please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of MIDCAP Radar. I'm Prashant Nair. With me is my colleague Sumaira. The markets are at the day's highest point, 84 points up, 10,700 is where we are trading. I mean, sectors which were gaining are still up. PSU bank index is up not 5% plus now, but 4.5%. The private bank index has put on a little bit more. It's up 1.6%. And energy, the energy index, led largely by Reliance, is up about 1.6% as well. And the Nifty, as a consequence of all of that, is up at the day's high. We're, of course, awaiting numbers from the auto major Maruti. Reliance will report numbers, but that is later. But Maruti should be out any time now. And I think that'll hog a fair bit of spotlight. Stocks up 1.7%. So, afternoon. That is the market headlines at this point. 75, 76 points on the Nifty still holding. Bank Nifty, of course, clear winner 1.4, led by PSU banks. Kiran Jadhav is with us on the top of the show with some trading ideas. Kiran, thanks very much. Good to have you here. I mean, your sense of what we're seeing. So now this is building on into a pretty strong move. What would you do on the Nifty and what would you trade?
Nifty, we are long. Basically, we expect the Nifty to go around 10,760 kind of mark, where we have left a gap when we were going down. This was in the month of February. So this is an important resistance to be looked at. I don't see the Nifty coming down. Our stop losses for now are placed at around 10,675, where it's just below the day's consolidation. So basically an up move is what we are expecting. On the stock specific side, I have UBL, which is my first pick, where we suggest that one should go long. Terrific open interest additions that we are seeing, around 23%, 26% now as I speak, and the kind of volumes that it has clocked is really classical. So here we have a stop loss of around 1165 and a target of 1235 till tomorrow. Second will be BEML. BEML, in the last few hours, we have seen a strong kind of pullback of the great fall that we had seen from a level of around 1170 to a level of around 1020, sorry. And the kind of pullback we have seen with strong volumes, with small kind of open and interest additions of around 4-5%, really tells us that this is a pullback rally which can take the stock to around say 1110. That will be till tomorrow with a stop loss of 1055. Third stock is a high risk, high return kind of strategy for the day. Adani Enterprises, where we feel that the longs have been trapped at the higher level. So there was a huge kind of position that was built up between 146 to 148, and the stock has been doing lower tops and lower bottoms for the intraday charts. So we expect the stock to fall in the last couple of hours of this trade that is left for the day. Our stop loss for now is 146 and a target of 141 to 139 is what we expect today.
Okay, two buys and one sell in terms of stocks. Kiran, so anything in PSU banks from beaten down levels, there is a big recovery. You expect it to last, to sell off? And if you could look at RBL separately and tell us how that is sitting. RBL Bank, that is, yes.
Yeah. So in the PSU banks, what we believe is SBI looks very strong. It has done a double bottom pattern formation on the extreme short-term charts at around the 233 mark. Strong volumes, strong open interest additions that we are seeing, and the strong volumes as well. So we believe that this should continue for a couple of days, and we should head towards the 258 to 59 kind of mark till tomorrow. For RBL Bank, we have a word of caution for now, although the stock is looking very good. We are at the falling trend line value, which is at around the 245 mark, which also coincides with today's top. So that will be a huge resistance area. Already the stock has rallied quite a bit from 450 to 540 in the last, say, a month's time or so. So for a rally from here is not really likely for now. However, we still advise investors to have a trailing stop loss. For now, a nearby trailing stop loss will be at around the 530 mark.
All right, Kiran, thanks very much for stopping by. Let's talk about a whole host of other stocks which are reacting to numbers. Amongst them, look at HIL. What a strong move over there. In fact, it's seen a good move this week as well. They've posted good earnings. SL Propack too is higher, although it's off of the day's high. And IEX, a tad bit of a subdued performance there. So we caught up with the management of all of these companies. Let's hear them out.
On the pipes business, we are very bullish. We are taking all steps towards developing the brand and marketing strategy as well as the sales strategy. The quality of this product, as has been vetted by the market analysts, have been very good. So we are definitely hoping to grow at a high double-digit number on pipes for the next few years.
On growth for the whole of next year, we believe that whatever building blocks we needed to put last year has been put, and therefore we will be back on track for growth of this financial year. The GST issues are behind us. The Europe underperformance of German unit is behind us, which is in fact in the fourth quarter has already started to grow. And we are seeing good non-oral care growth coming in US and Mexico. So overall, we believe that we will show a double-digit growth in this financial year.
As far as the demand is concerned, I am seeing there is a lot of demand increase in many of the states: Gujarat, Maharashtra, West Bengal, UP, Bihar, southern states. The demand increase is there. We should see a growth of almost about 20% in this year, because we are going to have elections in 4 major states. Plus, this is a pre-election year. Government has also taken many initiatives for ensuring 24/7 power supply.
Okay, those are managements and corporates we spoke with earlier in the day. There are flashes on the bottom of the screen. Fitch is coming up with some comments on India. I mean, the big headline, of course, is the fact that they've reaffirmed their rating and they maintain outlook being stable. Lata is joining in with any other data points we need to watch out for. Any surprises, first of all, Lata, in this?
Well, some people may say it's a negative surprise that we continue to remain BBB minus. Outlook stable, not even outlook positive, as if to say that, you know, sometime in the near future we will increase your rating. BBB minus for the longest time. Moody's was the only one which has upgraded India to BBB plus. Nobody followed it up. S&P reaffirmed that they are sticking with BBB minus, and now Fitch reaffirms. You know, rating agencies normally are not the first to recognize any improvement, but then you can't even expect an improvement in rating when India's biggest fiscal headache, which is crude, is on the uptick. So if anything, people will be a little worried that the fiscal math will not work out if the excise duties will have to be rolled back. And therefore, I mean, to that extent, this is, you know, par for the course. This is on expected lines. We won't expect any rating agency to upgrade India at a time when both the current and the fiscal deficit can be under pressure because of the rising crude prices. Fiscal deficit so far, you know, there is no excise duty rollback, and if anything, the GST collections are looking better. It does appear that March is finally going to be a 1 trillion rupee collection or more, and we may be able to maintain a higher, you know, run rate in the coming months. But if the excise duty gets rolled back because crude remains over 75, then that fiscal math will be under pressure. As well, current account deficit, exports are not firing at all, although our imports are rising because of crude, and therefore current account deficit is a genuine issue. Under such circumstances, you should not expect a rating upgrade. But what is going good for India is growth. Fitch has given growth forecast of 7.3% for FY19. RBI just about couple of weeks back, 1 week back was it, said that the forecast would be 7.4, and central banks are normally conservative. So, and Reserve Bank was fairly bullish on growth. They went on to say that output gap is closed, and you know, they will look at expansions, even private sector expansions of capacity. So growth is doing well, and that usually papers over a lot of problems. Even if Fitch is not giving you a rating upgrade, if growth is really powerful, Indian corporates will be able to raise money more attractively, or will be able to pay that extra interest rate and still manage their capex. So I don't think this deserves more than a passing mention at this point in time. It's on expected lines and will not disturb the debt market.
Yeah, that's true actually. So I think the going may have been good because Fitch says that there's a constraint to the ratings, which is the weak fiscal balances, which they've called the Achilles heel in India's credit profile. Lata, thanks very much. Earnings season and a lot of numbers are expected today. So outside of the index, let's focus on stocks like RBL Bank, there's Shriram Transport, there's UPL. So Abhishek and Sonal are standing by to give us the expectations. But first up, over to you, Abhishek. What are you expecting from RBL?
Well, Sumaira, the loan growth for RBL Bank over the last 4 quarters has been in the region of 35 to 40%. So loan growth above 35% will be positive. Over the last 4-5 quarters, the low-cost deposit flow has also been improving. So along with the strong loan growth coupled with, low-cost deposit share increasing, the net interest margin has moved in from 3.4 to 3.9%. So anything above 3.5% will be positive. Their asset quality has largely remained stable. Last quarter, the gross NPA was at 1.56%. So gross NPA below 1.65% will be positive. Our poll suggests an NII growth of 43.5%, while net profit to grow at 33%. Back to you.
Okay, we got Shriram Transport numbers also, and we'll preview those in a bit. But let's go to Sonal now and just preview what UPL may actually report. Sonal, over to you.
Well, we're expecting mixed set of earnings, Prashant. In terms of revenue, we're expecting 14% volume growth aided by the Brazil geography. But profits, they're expected to be a little subdued basically because of higher taxes. In terms of revenue, we're expecting a growth of around 8.5%, guided for revenue growth of 10%. EBITDA is expected to go up around 20%. Margins are going to go up by around 200 basis points. And profits are expected to be flat. In terms of volume growth, domestic segment is expected to grow at around 7.5%. Overall volumes are expected to go up by 14%, mainly aided by the geographies like Brazil and rest of the world. Latin America is expected to recover and grow around 8%, majorly because of healthy soybean sowing, and Europe is expected to register revenue growth of around 9%. But overall profits are expected to stay subdued because analysts are expecting that the profits rates will be higher. The stock has not done much in last 1 year. Even today it's quite flattish. Let's see how it reacts after the earnings today.
All right, Sonal, thanks much. Abhishek, back to you. What about Shriram Transport?
Well, CV sales have been pretty strong even in Q3, and that effect is also seen in Q4. And Shriram Transport is the largest financer in used CV market. So net interest margin above 7.4% will be positive. Remember, over the last 6 months, the bond yields have been increasing. AUM growth, that is the loan growth, is expected to be in double digits. Now, in this quarter, Shriram Transport is migrating towards 90 days past due recognition in terms of stressed assets or asset quality against 120 days past due that they did earlier. So provisions are expected to remain on the higher side. The gross NPA, which was % in the previous quarter, can move anywhere around 9.4 to 9.5% on account of this migration. Our poll suggests an NII growth of 14.2%, while net profit to grow at 149%. That is on account of lower base last year. Back to you.
Okay, I mean, the stock, of course, has absolutely been a stellar outperformer, rank outperformer over the last couple of months. I mean, look at Axis Bank. It's up 6.25%, just 2 rupees off the high. So it made a high of about 527. It's about 525 now. So it's looking very, very good. And volumes, of course, are also super strong. Then, of course, I mean, it's a whole long list of public sector banks like Union, Bank of Baroda, Canada Bank, Indian Bank, etc. And then you get to the other stuff. ICICI is not doing badly. 289 to 90. It's up 4% now. It's a big reason, I mean, along with Reliance, why the index itself has been so buoyant from the word go today. 86 points on the Nifty in all, so 10,700 plus is where we are at. We spoke with Biocon, the management, earlier in the day. They reported fourth quarter earnings. Here's a slide of that conversation my colleague Ekta had with Kiran Mazumdar-Shaw. Listen in.
I think we've seen a very strong, Q4, which is a good note to end the fiscal year on. And like you rightly said, this growth has been largely driven by our biologics business, which has seen a jump of 47% year on year, and our research services business, which saw a jump of 45%. Both these have actually delivered for 2 reasons. The biologics business actually has delivered because of our expanding footprint in the emerging markets. And we've also, put behind us some of the capacity shortages in terms of addressing biologics opportunities across emerging markets this fiscal.
87 points on the Nifty. Things are looking better and better. ICICI Bank seems to be the stock which is leading the charge. The other big one is Reliance, but that is still 10 rupees off the day's high. 1,001 odd is where RIL is at, high 1,011. It's banks mainly, and Axis and ICICI in particular. PNB MetLife has kick-started its IPO process. It's filed papers with its regulator, which is IRDA. They're looking at getting a valuation of between 10,000 to 12,000 crore rupees. I mean, the story which we broke earlier in the talks excited, and for good reason. Yash Jain will tell us what exactly are these companies and how do they get affected because of this IPO. Yash, over to you.
Well, absolutely. If things go as planned, then PNB MetLife could be the fifth insurance company to list itself on the exchanges. Sources share with CNBC TV18 that PNB MetLife has filed its draft IPO papers with the insurance regulator, seeking IRDA's in-principle approval as far as PNB MetLife IPO is concerned. Now, as far as the contours of this particular IPO are concerned, we are given to understand that PNB MetLife is likely to dilute 25% stake in the first tranche, seeking a total valuation of about 10,000 to 12,000 crore rupees. Adding more contours as far as the IPO is concerned, Punjab National Bank is likely to dilute approximately 10% out of its total 30% stake in the company to raise anywhere between 1,000 to 1,500 crore rupees. Apart from Punjab National Bank, other shareholders like Elpro International, Jammu and Kashmir Bank, as well as M. Palunji Group are likely to participate in this PNB MetLife IPO. Interestingly, the foreign partner MetLife is not likely to participate in this IPO and retain its 26% stake which it currently holds in PNB MetLife. Now, as far as the approval is concerned, that crucial in-principle approval from IRDA is likely to be granted within the next 2 to 3 weeks.